Welcome back. We're continuing our talk about things like the Green New Deal, and my next guest has been investing in companies operating in the environmental space for over a decade. And like Jeremy Rifkin, he too says a great energy transition is well on its way. We're going to talk about maybe his perspective on how soon it could be coming. I'm joined by John Cook. He's president and CEO of Greenchip Financial. It's nice to see you again.
Thank you.
Obviously, I mean, alignment in terms of your belief in terms of where things are going.
Absolutely. Jeremy's vision for this great energy transition is totally in line with what we've been investing in for the last 12 years, believe it or not. There are differences in how fast we think it's going to happen, and that's related sometimes to rollout of technology and technology cost curves, but we need visionaries like this. I mean, this is a huge global problem, and the investment opportunities are tremendous, and I don't think investors realize that. And the challenges for those who aren't prepared, and the business models that can't adjust, are enormous.
Yeah.
And so we need books like Jeremy's written and the types of narrative that he's able to pull together.
Yeah, and it's funny. I mean, narrative is a very important word because it becomes very politicized, south of the border, very politicized in our own country in terms of the things we're trying to do at the same time. One thing that stood out to me, though, is he did talk about the fact that, from his perspective, and I think he was talking a bit more about Europe when he was there too, is that lots of money. There's lots of pensions that want to invest and lots of those types of funds and not enough projects to invest in. And what's your reaction to that? Because, you're on the ground, you're doing it. Yeah,
I mean, in the private infrastructure world, the figure last year in renewable energy was about $300 billion globally, same as it had been for the last 3 years, and about $800 billion if you include all the other connective infrastructure that Jeremy talked about. So that's not an insignificant amount of money globally. I think what pension funds really like are projects that are packaged up and de-risked by government.
Yeah.
And a lot of what Jeremy talks about is government's role in trying to accelerate this transition. But the one area that I think pension funds are really missing out on are all the opportunities in listed securities that really are often the same things, just that they're traded. Mm-hmm. And because they're in this space and so few analysts cover it and it's so misunderstood, there's tremendous value, not universally, but if you know where to find it, there's tremendous value and upside.
Like what? I mean, go ahead.
Yeah, so, I've talked a lot about solar before. Still Canadian, Jinko, our two largest holdings, trading at single-digit price earnings, price to cash flow multiples, still see huge growth. Like the top line just keeps growing in solar. But some of the other efficiency technologies like power management semiconductors or passive electronics that actually make the whole smart grid that Jeremy was talking about work.
And can you just back up for those who are in the space? So passive electronics are?
Passive electronics, things like capacitors that will hold charges for small periods of time.
Yeah.
Power management semiconductors run all the electronics that we have, electric motors, all the types of high voltage connectivity that we're going to need in electric cars and so on. So these are sort of the backbone bits, and they're often tied up in traditional business cycles like the auto cycle. And what we see is this transformation where we're moving with lots of cheap green electrons to electrifying a more efficient future economy. The growth in these, in demand for these parts is tremendous. Mm-hmm. And so there's lots of opportunity for margin expansion and so on. Mm-hmm. That's just to name a few, but there's, inverters, lots of other sort of technical bits that I could go into. What
do you see? I mean, you're pioneering this. I mean, you've been doing it for a while, but what do you think it's going to take to really kind of start bringing this more mainstream, to bring this more into like the mainstream investor appetite?
Yeah, I sat around for 11 years wondering that same thing. In the last year, something's really changed. And I think it partially was Greta. But I think we've hit this tipping point where, 2 years ago, the Caisse de dépôt said we're going to increase our low carbon investments by 50%. Mm-hmm. Teachers are allocating, funds to this. CPP.
So again, pensions again.
Yeah, the pensions are getting there. But I've also been out on the road talking to retail investors in the last year. And they're very interested, and they tell me it's client driven.
Yeah.
So while they weren't seeing it originally, so I think we're getting really close. And, our little company is growing very quickly right now. So it is happening.
Yeah, and when do you, I'm curious too, when do you see, because the one thing we do see is that, valuations, we've seen some nice appreciation in many names, but we don't see this kind of valuations we see in other big sectors yet, right?
Sure, yeah. So three reasons for that that I would give. One is there's lots of hype and cynicism that sets in because the time takes so long for these things to play out.
Yeah.
So there's an opportunity to get these companies when the cynicism's there. There's less analyst coverage. There's lots of information advantage that can be gained. So that's where you find the value, or how you find it.